Hi students, this is Michael. I am a lecturer in commerce. I have 42 years experience in teaching commerce subjects. I taught financial accounting, cost accounting, management accounting, business mathematics, business statistics and other related commerce subjects. In this video, I would like to present the base fundamentals of accounting, that is journal entries. Students are getting confused with writing journal entries, so I want to make the journal entries simple. There are three methods for writing journal entries. The first one is single rule method. In this we use only one rule, debit aspect and credit aspect. And second method, traditional approach. There are three rules: real account rule, personal account rule, nominal account rule. And third method have five different rules. So I am going to teach you all these methods in detail, slowly and steadily, so that even poor students also will be able to understand the subject very easily. Now, I want to start my class with single rule method. Journal. Single rule method. Single rule method. In this, we take a business transaction and we split the business transaction into two aspects. One is coming aspect, the other one is going aspect. The coming aspect is called debit aspect and going aspect is called credit aspect. Let us take an example. Example 1. Machinery purchased. Machinery purchased. Purchased rupees 10,000. In this, we are receiving something, that is machinery. This is coming aspect. Coming aspect. This is debit. And going aspect is cash, that is credit. So we write the journal entry as machinery account debit to cash account 10,000. Here I am not ruling this, means format. You might be knowing this format. First date column will come, then particulars column will come, then LF column will come, debit column, credit column. If you see the books, you will understand the format. Now there will be some brief description under this entry. Being machinery purchased for cash. I am not writing that. Here, how we identified what is coming, what is going. Machinery is coming, cash is going. That's why the coming aspect is termed as debit aspect. That debit aspect is to be written first and credit aspect is to be written next. Now, take a second example. Suppose you sell the same machinery after some time. Machinery sold for rupees 5,000. After using it for some years, you sold it. Then what is the entry? What is coming here? What is going? Here, since we sold, machinery is going, that is going aspect, that is to be credited. And what is coming? Cash is coming, that is debited, that is coming aspect. So, cash account debit to machinery account 5,000. Third, machinery purchased from RAM on credit rupees 20,000. In this transaction also we are receiving machinery, that is coming aspect. So immediately we should write that coming aspect as the debit aspect. So machinery account debit. Now what is going out? Here nothing is going out because we purchased the machinery from RAM on credit. On credit means now we are not paying any money. We will pay money later. Now with whom that going aspect is there? With RAM, going aspect is there. He is losing the machinery, we are receiving the machinery. So RAM has the going aspect, that is machinery. So when the other person has the going aspect, we must write his name to RAM account. Amount is 20,000. 20,000. We will write the narration. I am not writing it now. Now, suppose we sold the machinery, the same machinery after using some time to a person on credit basis. Machinery sold to Kiran on credit for rupees 12,000. Here machinery is sold means machinery is going out, that is going aspect. Immediately I am writing going aspect, that is machinery account. Then what is coming aspect? We are not receiving anything because we sold it on credit basis. We are not receiving money. But this machinery is received by Kiran right now. Now he has the receiving aspect or he has the coming aspect. That coming aspect, the person who is receiving the aspect, that person's name is debited. The person is here Kiran. So Kiran's account. Now the amount is 12,000. Fifth one, salaries paid rupees 5,000. When you pay salaries, you are losing your money. So cash is going out, that is going aspect. Going aspect is to be credited. To cash we write first. To cash account. How much is the amount? 5,000. Are we getting anything? Actually, we are not getting anything in the form of money or some other asset, but we are receiving some service. That service is given a different name. Here the name of that service is taken as salaries. Salaries. Actually, salaries is an expense. It is treated as an expense in the traditional method, that is next method. I am going to explain you the same journal entries in the traditional method also. Not in this video, next video. Salaries account, debit. You must remember here, when you receive any service, that service is to be given some particular expense name. When you are receiving money, receiving service, it means you are spending money for receiving the benefit. So, for that service, we give a special name, that is salary. Suppose you pay rent, then cash account is created and the rent account is debited because you are using the building. 5,000. Sixth one, rent received. Rent received, rupees 3,000. For example, you might have given a part of your business building to somebody else to be used by him. Now here we are receiving some money. That money is to be treated as a coming aspect and to be written as cash account debit. 3,000. Now, what is going aspect? You are letting or allowing your building to be used by some other person. It means you are giving your benefit. Otherwise, if you have not given for your building for rent, you would have used it. But now you are not using it. You have allowed the other person to use your building. It means you are losing some benefit or you are giving some service. For that service, we should give a special name. That name is called rent. Rent. So in this way, I just used only one rule. What is coming aspect? Coming aspect, that is debit, and going aspect, that is credit. In some transactions, we have both coming aspect and giving aspect. But in some transactions, we have coming aspect and we don't have going aspect. In that case, we should write the name of the person who is giving that benefit to us. Just like here, machinery. We purchased machinery from Ram. Ram is giving. So Ram has going aspect. That's why Ram's account is credited. In some transactions, we have going aspect, but we don't have a coming aspect. In fourth example, we sold the machinery to Kiran. Here what happened? We have going aspect, that is machinery. Machinery account is to be credited. We don't have any coming aspect. But who has that coming aspect? To whom this machinery is going? Kiran. That's why Kiran's account is debited. So in this way, we have to write the journal entries using one rule. This is very, very easy and the simplest way of writing journal entries. Thank you very much. I'll meet you in the next video. Thank you. Bye.